I'm not convinced that we're in a silver bullion breakout yet. I think silver has merely caught a bid. If you look at gold, gold is approaching its real as opposed to nominal all-time highs at $2,700. Silver's nominal high was $50, but the inflation-adjusted number is more like 80. So silver, I think, has a while to rip. In my own experience, as we talked about earlier, precious metals bull markets are inevitably led by gold because the first buyer is a fear buyer. We have a silver bull market coming up, which is to say that the primary metal itself does what it has done. I think people will be surprised at the performance, the ultimate performance of silver equities. Notice that I preceded all of that with the word if. Speculators are looking for certainty, which I think is too much to ask for in any speculative market. You assign probabilities to outcome and you risk those probabilities. I should precede this by saying I'm long Abra silver. So people need to know when they hear my remarks that I'm long. I'm not merely up, I'm way up. Note too that I have known the geologist there, VP Exploration, for 30 years. He used to work for Ross Beatty. I have a high degree of confidence in him. And I like John Miniotis. I like the fact that when I ask him to describe for me 3 things that can go wrong, he has 3 things that can go wrong right on the top of his head. He doesn't BS anybody, including himself. And that's important because if you have identified at least 3 risks, and you have contingency plans in place to deal with the risks, then you're a good CEO. You're not a used car salesman. I also like the fact that he understands capital markets. A lot of CEOs with an exploration project like this would raise money when they needed it. They play just-in-time chicken with capital markets. Miniotis raises the money when market conditions are good, as opposed to waiting until he needs the money. He has been criticized by some people for tapping equity markets too much. The fact that his stock is up 250% will tell you something about the fact that his strategic timing for raising capital, which allows them to run 8 or 10 rigs, is much more intelligent than this just-in-time BS that some people do to manipulate markets. So he's a high-quality guy. I also need to say, well, 2 things. The project Diablios is one that I helped Silver Standard buy many years ago, and I'm embarrassed to say that the exploration potential was completely lost on us. So I'm delighted that this team has taken a project and has done it justice. What is important to me with Abra Silver right now is it would seem that they understand the nature of the deposit or deposits so well that drilling has become predictive. In other words, they say, this is what we think is happening. We're going to test this idea with 8 or 10 drill holes. And the 8 or 10 drill holes confirm the idea. In my experience, often but not always, when the deposits are well enough understood that the drilling becomes predictive, you're at sort of a fulcrum point in terms of net present value additions. And I think we may be there with Abra. I think they understand the deposit. I think the nature of mineralization is profound. But importantly, it looks to me like the drilling is becoming predictive. When drilling becomes predictive, the amount of ounces that you add can, I'm not saying they will, but can go up dramatically. Note finally that the Abra deposit is in a fairly remote part of Salta province, so that the front-end capital costs are going to be pretty high, but they're coming down as a consequence of other precious metal developments and particularly lithium developments on the Salta Plateau. So when you look at the fact that this is by nature vicuña pasture, high, dry, and remote, understand that there are other active mining operations within 40 kilometers, which is to say 25 miles of this deposit. Unlike when we had it in Silver Standard and you had to get there by horseback or by helicopter, 2 unpleasant options. You can drive there now, which makes a big difference.
Rick Rule's insight into the precious metals market is always a masterclass in understanding both the psychology and fundamentals driving gold and silver. First and foremost, he emphasizes a key dynamic, the rhythm of precious metals bull markets. Historically, he says, these cycles are led by gold. The fear buyer, as he describes them, triggers this initial momentum. This group isn't looking to speculate, but to protect their wealth against currency devaluation, inflation, or geopolitical turmoil. Once gold has established a compelling narrative, only then does silver follow. And when it does, it tends to move with explosive force. Think of it this way. Gold is the rational, older sibling, cautious and steady, while silver is the wild, younger one, emotional, and prone to dramatic moves. Rule admits he doesn't entirely understand why silver behaves this way, but he's seen it enough times to know it's a predictable pattern. The volatility of silver, combined with its lower unit cost, seems to draw in generalist investors who are lured by the potential for greater returns. As the precious metals space becomes more mainstream, the attractiveness of silver escalates, driven by a combination of fear and greed. Rule candidly discusses his portfolio strategy, noting that he has a significant allocation in gold as a form of insurance. This isn't about making massive speculative gains for him, it's about preserving capital. "I don't need to make more money," he says with humility and a touch of humor, highlighting his age of 71 and his risk aversion compared to earlier years. However, he doesn't entirely discount silver's speculative allure. He has about 2.5% of his equities portfolio in silver equities, acknowledging the high risk and potential for massive upside. This small stake could balloon to 20% if history repeats itself and silver equities mirror their past bull market performances. What makes silver so intriguing is the byproduct supply, meaning that a significant portion of the world's silver comes as a secondary output from mining other metals like copper or zinc. Rule explains that silver is not only priced in US dollars, but also in various international currencies, which adds layers of complexity to its market behavior. For instance, in countries like India and China, silver is significantly more expensive in local currencies than in the dollar. This often results in profit-taking and strategic market movements that can dampen the metal's price action in the US, despite strong fundamentals. One critical aspect to consider, according to Rule, is the inflation-adjusted price of silver. The nominal all-time high for silver is $50, achieved during previous bull runs. However, when adjusted for inflation, that $50 figure is closer to $80 in today's dollars. This means that for silver to reach its real all-time high, it still has a long way to run. The comparison to gold is equally compelling. Gold's real all-time high would be around $2,700, not the $2,000 range we see today. Rule suggests that a tenfold increase in silver is not entirely out of the question if conditions align, pointing to historical precedents where silver's price shot up dramatically over a decade. Rule's anecdotes about past cycles add a layer of wisdom. He reminds us that in the 1970s, silver's price went from $1.50 to $50, an incredible rise that occurred in a non-controlled market. Similarly, from 2000 to 2010, the metal went from $5 to $50. If history repeats or even rhymes, silver could experience another exponential run, driven by a confluence of inflation, economic instability, and the loss of purchasing power in fiat currencies. He emphasizes that most people misunderstand these price movements. It's not that gold or silver necessarily increase in value, it's that the dollar, or any fiat currency, loses value. Gold and silver maintain purchasing power. He humorously points out that the gold price may seem to be climbing, but it's really just keeping pace with the devaluation of the dollar. The same ounce of gold that bought a tailored suit in the early 1900s can still buy a high-quality suit today. This constancy is why Rule holds gold not for speculative gains, but as a hedge against the erosion of currency value. Despite his cautionary stance on silver's volatility, Rule acknowledges the potential for massive gains. When silver breaks out, he says, it does so dramatically. The market will tell you when that happens. It won't be subtle. Silver's price movement becomes so pronounced that it's impossible to ignore. He recalls that some people get excited over silver moving from $31 to $35, but he dismisses that as insignificant in the broader context of what a true bull run could achieve. In his view, those numbers are mere rounding errors. When silver truly takes off, it will be a spectacle.
I'm not convinced that we're in a silver bullion breakout yet. I think silver is merely caught a bid. If you look at gold, gold is approaching its real as opposed to nominal all-time highs at $2,700. Silver's nominal high was $50, but the inflation-adjusted number is more like $80. So silver, I think, has a while to rip. In my own experience, as we talked about earlier, precious metals bull markets are inevitably led by gold because the first buyer is a fear buyer. When the precious metals narrative gets established by gold and the momentum comes into gold, The next step is the generalist investor coming down into the precious metals space. And the generalist investor, whose motivations are both fear and greed, tends to favor silver because of its volatility and perhaps because of its lower unit price over gold. And then leadership changes to silver. And in my experience, when that happens, you don't have to look for some subtle signs. The upward price pressure on silver is so dramatic that nobody needs to tell you the silver is broken out. There are people now who will argue that a breakout in the silver price above 31 or 32 to 35 is something special. Judging from past silver bull markets, that's a rounding error. I mean, truly a rounding error. So I'm not convinced that the silver bullion is in a breakout phase or that leadership in the precious metals bull markets is going to shift from gold to silver. I remember in our earlier interview describing the high-quality junior stocks as a coiled spring. That wasn't so much about the fact that I thought the silver price was going to break out. It was about the fact that the silver equities were hated. They were hated, I think, because a whole generation of speculators was spawned in 2010, 2011 with the Reddit silver squeeze. They had expected immediate gratification, and when they didn't get it, let's just say that there's no hate as sincere as the hate of a jilted lover. And the junior silver stocks probably ran into 150,000 jilted lovers. Really, truly profound hate. And it seemed to me at that point in time that with or without the silver moving, that there was nobody left to sell. Everybody who wanted to sell, November, December, January, had sold. That turned out to be, miraculously, even in terms of timing, exactly right. The higher quality junior silver stocks, I think we're going to talk about a couple of them today, are uniformly up 200% this year without the silver price moving that much. They're up on what I would describe as a dead cat bounce. They're also up on results, which is very, very, very healthy. It is arguable that those stocks don't need to go up anymore at these silver prices. But if past is prologue, and we have a silver bull market coming up, which is to say that the primary metal itself does what it has done, I think people will be surprised at the performance, the ultimate performance of silver equities. Notice that I preceded all of that with the word if. Speculators are looking for certainty, which I think is too much to ask for in any speculative market. You assign probabilities to outcome and you risk those probabilities.
Continuing from where we left off, Rick Rule's analysis of the precious metals market and his investment approach to gold and silver equities offers a window into the complexities and potential of these markets. His perspective is informed by decades of experience, and his insights help illuminate why some investors remain committed to precious metals as both a hedge and a speculative play. Let's dive deeper into the sentiment shift we're beginning to see. Rule points out that historically gold leads the charge in any precious metals bull market. This is because gold buyers are often driven by fear of economic instability, fear of government overreach, and fear of currency debasement. Silver, on the other hand, tends to attract investors later, once the gold narrative has been established and the market starts to gain momentum. These silver investors are motivated by a mix of fear and greed, drawn to silver's higher volatility and the potential for outsized gains. In today's market, we see signs that this pattern may be unfolding once again. Gold has been inching closer to its real inflation-adjusted all-time high of around $2,700. Meanwhile, silver is still far from its own inflation-adjusted high, which would be about $80 as Rule highlights. If gold continues to strengthen, it could set the stage for silver to make a dramatic move. Historically, when silver takes off, it does so with a velocity that few other assets can match. And when that happens, it's not subtle. It's the kind of move that turns heads and dominates financial headlines. Rule's analysis of silver equities is especially revealing. He refers to high-quality junior silver stocks as a coiled spring, a metaphor that captures the tension and potential energy stored in these underappreciated assets. Many of these companies suffered from years of neglect, partly because a generation of investors felt burned by the market after the silver squeeze hype of the early 2000s and 10s. As Rule puts it, there's no hate as sincere as the hate of a jilted lover. And the silver equities market had more than its share of jilted lovers. But now the landscape is changing. The recent rally in junior silver stocks is not just a dead cat bounce. It's being fueled by tangible exploration successes and a shift in sentiment. Investors who were once disillusioned are starting to see the potential again, especially as some of these companies deliver impressive drilling results. Rule believes that if silver does enter a bull market, the upside for these equities could be enormous. He acknowledges the risks, though, and emphasizes the importance of understanding that these are speculative investments. Now let's shift gears to talk about the broader economic environment that could drive precious metals higher. Rule paints a sobering picture of the financial world, where central banks have painted themselves into a corner. The Federal Reserve, for instance, is trapped between two undesirable outcomes: raising interest rates to combat inflation, which risks crashing the economy, or lowering rates to support growth, which would devalue the currency further. It's a classic case of damned if you do, damned if you don't, and Rule believes that the Fed's current strategy is unsustainable. One of the most striking observations he makes is about the flawed nature of the Consumer Price Index, CPI. He describes it as a worthless statistic designed to mask the true extent of currency debasement. The reality, he says, is that inflation is far from defeated. The cost of living continues to rise, not because goods and services are inherently more expensive, but because the purchasing power of the dollar is eroding. This erosion is not a temporary phenomenon. It's a structural issue that will only worsen as the money supply continues to expand. To put things in perspective, Rule shares a powerful historical anecdote. He recalls how when he was younger, a loaf of bread cost 20 cents. There wasn't a wheat drought causing prices to rise. The culprit was, and continues to be, the degradation of the currency. Over the decades, the money supply has ballooned, doubling roughly every decade. And every time central banks panic, they flood the market with even more currency, exacerbating the problem. It's a vicious cycle that ultimately fuels commodity price inflation, not because commodities are getting more valuable, but because the currency they're priced in is losing value. Rule's skepticism about the Fed's ability to manage the situation is palpable. He predicts that, within the next few years, we might even see calls to abolish the Federal Reserve. He notes that even some longtime supporters of the Fed are beginning to question its policies, especially given the boom-bust cycles created by its monetary interventions. The idea of abolishing the Fed might sound radical, but Rule argues that it's gaining traction among certain intellectual circles. He cites a full-page ad in the Wall Street Journal, paid for by the Mises Institute, which called for an end to the Federal Reserve. The ad made a compelling case, and Rule believes that if a crisis unfolds, this line of thinking could gain even more momentum. The concept of real money versus fiat currency is central to Rule's thesis. Gold and silver have been stores of value for thousands of years, outlasting countless fiat currencies. When people talk about the price of gold going up, Rule insists they're looking at it the wrong way. Gold isn't appreciating, it's the dollar that's depreciating. An ounce of gold today still buys roughly the same amount of goods and services it did 100 years ago. It's a constant, a financial North Star in a world of ever-changing currencies. This brings us back to silver and its potential. Rule points out that silver isn't just a monetary metal. It has significant industrial applications, especially in the tech and green energy sectors. As the world moves toward more sustainable energy solutions, the demand for silver in solar panels and other technologies is expected to soar. This industrial demand, combined with silver's historic role as a store of value, creates a compelling case for its future price appreciation. But what about the skeptics? Rule doesn't dismiss their concerns. He acknowledges that the silver market is notoriously volatile and that investing in junior silver stocks is not for the faint of heart. However, he also believes that the potential rewards justify the risks for those who can stomach the volatility. His own investment in AbraSilver is a testament to his belief in the sector. He trusts the management team, has confidence in their exploration strategy, and sees the potential for significant upside if silver breaks out. In the end, Rule leaves us with a thought-provoking takeaway. Investing in precious metals is not about seeking certainty. It's about understanding probabilities and making informed bets. The future is never guaranteed, but the past offers clues, and history has shown that when precious metals move, they can do so in spectacular fashion. As he puts it, the next decade could be very good for gold and silver indeed, especially if governments continue down the path of fiscal irresponsibility in monetary debasement. Investors who are prepared, both financially and psychologically, stand to benefit. Those who are looking for a sure thing, however, might be better off sitting this one out. As Rule says, investing in gold and silver requires both conviction and a clear understanding of the risks. But for those who believe in the power of real money, the potential rewards could be life-changing.